tech startups have just come off a record-breaking year, raising over $5 billion, even while funding globally was down 55%. But the sudden collapse of Silicon Valley Bank, SVB, has sent shockwaves through the tech and banking sectors, not just in the US, but globally as well. And Africa is not immune. The US government has guaranteed all deposits, but there may be ripple effects to come. So will the collapse of SVB make investors more skittish going forward? Hello, I'm Carol Pinot. Welcome to our show, Africa USA Now, current events at the intersection of Africa and the United States. Our program is presented by the World Trade Center, Washington, D.C., and supported by the African Development Bank and the Africa Investment Forum. SVB was an essential part of the Silicon Valley ecosystem. Nearly half of the U.S. tech sector banked with them, and they were major investors in venture capital funds. The bank understood tech startups, not just in the U.S., but globally as well. While most African startups might not have been big enough to catch their eye, the larger ones were, and some tech company founders say that SVB was more welcoming than others. In a recent statement, the founder of ChipperCash, Africa's latest tech unicorn, noted that 5 years ago, when they were trying to open their first bank account, SVB was the only bank that would accept them. The U.S. government has stepped in to guarantee all deposits at SVB, and many companies are now coming back to bank with them. But that solves the issue for today. There is a bigger issue of financing this crucial growth sector in Africa, and whether there is too much reliance on investment from outside of the continent. Let's bring in our experts to take a look at this. Eric Osiakwan, Managing Partner at Chanzo Capital, Karima El Hakim, Country Director for Egypt at Plug and Play Tech Center, and Sharif Aziz, co-founder of Subspace. Thank you so much for being with us today. So let's start with what happened at SVB and how Africa was affected. Sharif, I understand that you were directly affected by it. Can you tell us what happened?
Yes, we were. So basically, more than 95% of all our funds were at our bank account in SVB. So we were definitely directly affected. And each day was a different feeling, from a feeling of worrying to a feeling of losing it all to maybe some sense of hope to maybe getting your feet back together, right? So we started first day with the run that happened and then trying to get the cash out, which we couldn't do on time. And then realizing that maybe we would get only the insurance amount. And then on Monday, we started hearing news about the federal stepping in and then maybe reimbursing the money. So till now, we still haven't gotten the money, but at least we're kind of feeling more secure.
That sounds like an incredibly difficult roller coaster.
Indeed. So we went from having months and months of runway to basically having 1 month and then having to understand how can you solve this in a week or two before your next payroll.
And Karima, Plug and Play, I understand, is the 10th largest investor in African startups. So significant on the continent. And you had a number of founders that were coming to you that weekend and since then.
Absolutely. And one of them is sitting right with us. He was the source of my anxiety throughout the weekend as well. Of course, the story is still unfolding. For now, everyone's secured because it's basically the most secured deposits now today. That said, still a lot of uncertainties. We have over 60 portfolio companies in Africa, for example. Some of them, a lot of them were affected. That said, it should have been the case because if we had imagined that Africa wasn't going to be affected, then the venture scene has not been working so well. But for emerging markets, Africa, Middle East, APAC included, the top tier startups that are raising rounds from VC investors in the West or even in Europe or the US specifically are most likely going to choose a bank like SVB, or the only choice could have been SVB. So seeing that some African startups are affected gives us also an indication that the African venture ecosystem is actually catching up globally, even in terms of services, using the same facilities, understanding the market the same way.
That is really a good way of looking at it. Eric, across the continent in Ghana, though you work all over Africa, what are you seeing? What did you see from the fallout?
So we started picking this up on Thursday. And unfortunately for me, Friday, I took the weekend off to the countryside. So I was driving out of Accra and my phone kept going off. By, Friday night and Saturday, it was very clear that this was having an impact in Africa as well. And Africa is very connected to the global funding ecosystem. And so SVB plays a critical role. The guys who are funding you from the Valley, if they have an SVB account, it's easy for you to then have an SVB account so that you can move money to you very easily, right? So that's a simple way of getting it going. And so then SVB became sort of a very core backbone. But for me, I had been on discussion to see whether we can bring SVB to Africa, because SVB is being a sort of a core backbone of Silicon Valley, and you need that type of banking service for startups. And we don't have yet in Africa any bank that delivers that kind of service, which is why you also realize that a lot of African founders were using SVB.
Yeah. I have the sense that this is one of those things where everyone will remember where they were at the moment that this was announced. These big events that you were driving along thinking you were going to have a nice quiet weekend.
Yeah, a lot of it different.
Yeah, I bet.
All of the founders in Egypt created a WhatsApp group. And then on Friday, when everything was very dark, because that's when the statement of the government said there will be no bailout. So we decided all to go out actually in Maadi, and we took even a picture. We called it the day the ecosystem fell down.
That's amazing. Well, Karima, how has the situation changed since that dire weekend?
A lot of founders still bank there. Maybe they were considering moving, but then realized that SVB is the only bank of choice in the US, for example. They will not find refuge in any other bank outside SVB. And why is that? It's because of the practices of governance that, for example, we have in our venture markets. Are we actually only able to send our founders to SVB for their flexibility, or is SVB really a banking partner that chose to back startups from day one, regardless of where they are? And I believe it's the two cases. The SVB team actually came to Cairo for a roadshow last year, and they successfully arranged to meet a lot of the ecosystem players. They were very diligent. They were very attentive to the needs of Egyptian founders. And rarely do you see banks that are based in the US or even outside the local or regional markets that pay this much attention to the relationship management of early stage founders. They're not even founders that raised hundreds of millions of dollars.
SVB was the best bank for us, right?
The only.
To be honest, it just adds to the complexity. Now we're doing escrow accounts, we're incorporating in different countries to open bank accounts. So it's adding more cost and more expenses and more risks that we're trying to hedge. And also the Sophie's choice of should you transfer your money from US to Egypt and risk devaluation, not getting your money in US dollar out. So it adds more complexity.
Eric, I don't know if you're aware, there's a faction in the U.S. saying that SVB failed because they were so woke.
I think it has nothing to do with wokeness. They got overexposed to government securities, and when the Fed started raising the rates, those securities became less attractive, and so they had a capital shortfall. And what has happened to Silicon Valley Bank could happen to any other bank in those circumstances. I think that Silicon Valley Bank has actually set a pace as an American institution that is global in its thinking and is in its operations. This is an example that American firms should start paying attention to. Africa is, going to be a critical part of the 21st century marketplace. If you look at market growth and opportunities, Africa is a essentially a greenfield in that sense. So the reason that a lot of the Silicon Valley investors are looking at Africa is that they see the opportunity, right? And they want to be ahead of the game. And that's why they're investing in these founders in Africa.
Let's assume that 100 or 200, let's say, companies from Africa are banking in SVB. These are the privileged, or let's say the very top tier, crème de la crème companies, where it's actually a de-risking by banking with them, because they're the ones who managed to get foreign VCs to back them.
Obviously, the main reason is the federal interest rate. But we believe the bank run on SVB was that massive because of VC panic asking startups to withdraw their money. Oh, there's a report on Thursday. We saw it. We didn't think much of it. Then 2 hours later, all VCs are withdraw your money. So everybody...
You will still need VCs after this, I'm just saying.
Yeah, we have a successful business. So I hope that's more than enough.
It's too soon to tell what the long-range impact of SVB's failure will be in Africa's tech sector. But some surmise that it could make investors shy away from investments perceived as risky. When investors are risk-averse, startups lose out. In many cases, tech loses out. Maybe the tech giants wouldn't normally be affected, but most are reporting layoffs. And for Africa, once again, there's the perception gap, the wide divide between perception of risk and realities on the ground. So if investors are looking for that nice, secure investment that might not make huge returns, but won't keep them up at night worrying about risk, tech startups in Africa probably aren't where they'll be looking. Karima, how do you think this will affect Africa long term?
The investors are looking at Africa as risky, but even inside Africa, we're looking at the startup ecosystem as, oh, look at these guys again. They're creating all these problems. Now that there's a huge bank in the US that fell because of them. So again, it's also an educational journey for the general population in Africa, who are well educated, connected and everything, but they're not exposed whatsoever to the startup ecosystem. And for them, they've been seeing bad news after bad news after bad news affiliated to the tech space. And now we need to even internally convince the mass market that startups are safe and that big American banks are falling, not because of the startups doing, but again, it's macroeconomics. So we have multiple, let's say, battles to choose from. Or even central banks in Africa are reconsidering their regulatory pilots that they're doing to start looking at new regulation. Definitely, reflection can be useful, but then again, conviction is even more important now, and lobbying for our segment, for our stakeholders, explaining to the general public, to the policymakers, again, who are looking at this with some fear.
And it's interesting that as much as everyone talks about risk in Africa, this whole crisis is about an American bank that fell. This is not another story of risk in Africa, right?
I think sophisticated investors know that the opportunity in Africa is real when it comes to tech. So those investors are still going to invest. Maybe they're going to slow down a little bit. I think that for the Silicon Valley investors and the tech investing world in general, this obviously is going to mean that who is going to step up and play that role. And I think there are a couple of options out there. But I think there's a general understanding within the tech investing world that Silicon Valley Bank needs to be saved in some form, that it plays an important role. And for me, I think that we live in a world where the traditional banking, as we know it, is no more, is broken. The big banks need to start addressing the real needs of customers in a very different way, in a very different world. Otherwise, there's a lot of fintechs that will step up to this. We're seeing this already across markets in Africa, where fintechs are beginning to play a very critical role. We call them neobanks. A lot of neobanks that I imagine and playing a very important role. Traditional banks need to, rise up and smell the coffee.
Definitely. So, Sharif, one of the things in Silicon Valley that happens is failure is often sort of celebrated. This is a learning experience. I can't quite imagine that failure in Africa is seen the same way.
Yeah, actually, that's a very good question. I remember something on that Friday where we all met, and one of the founders said, at least we all now have an excuse to fail. But the way I see it is that it's only a failure if you don't learn from it, right? If it's only a failure if it stops at this stage. What we need to do is just understand what happened and then you go again. I think we need to start being okay with understanding that a startup that failed doesn't mean that it's because founders made bad decisions or because investors invested in a bad startup, or it has multitude of factors. It can be a market, it can be competition. There are a lot of different, it can be a bank in the US that went bankrupt, right? So there are a lot of different factors that contribute to whether a startup succeeds or not. And if anything, succeeding is the exception, not the failure, right? And I think what we're saying now is that the market is kind of adjusting because we've been stagnant for a long while, right? And it needs to readjust. And investor money needs to flow into either new startups or startups that are growing. So this is where I think where we are.
What failure does is that it allows you to eliminate the possibilities of things not working, but increase the possibility of things working. We are now invested in what we call second time, in some cases, third time founders, which means that they've done it before and probably didn't work. And the probability is that it'll work this time is higher because that person at least knows one way that it didn't work. Or early stage investing is that you invest in 10, 9 of them fail, 1 of them succeeds and makes up for the sins of the 9. So failure is part of the game, and I think this notion needs to be accepted more in Africa.
What I'm wondering is if kind of the rules end up changing for Africa, because there is such a perception of risk and such an intolerance of any risk in Africa. Do investors look at African failures in startups and say, oh, that's okay, the second time they'll do better? Or do they sort of not give them the same leeway that they would give others?
I don't give them the same leeway. I mean, I'll give them the same leeway, but a lot of investors still are presented by Africa. Actually, we did a transaction with a U.S. investor who is trying to price in a risk premium. And this is an investor who is doing their third investment in Africa. And I'm telling them, you've done 2 investments already. Why do you want to price a risk premium into this investment, right? As the market matures, most companies become successful. But Carl, the reality is that this is a classic stereotyping of Africa, because when investors went into Asia or went into India and China just 10, 20 years ago, there was those risk perceptions were not pricing to the markets, right? But also that the reality is that, I mean, most people who have taken this risk in Africa has made unprecedented returns. Some of these African early stage startups, some are making 3,000% return. Current book value is at 10x. In Silicon Valley, it's 3 to 5x. We have that double, right?
Whatever happens in Africa gets just a little bit exaggerated. So when a startup that raised $20 million fails, everybody's like, how, with all that money, $20 million? And you have startups raising $1 billion in the US and bankrupting, right? You have JP Morgan acquiring companies that don't have customers, right? I think we all know the stories. So if you look at what's happening in the region, if anything, I would assume that it's actually a very safe environment and people make crazy multiples, right? Because the market has gaps, has needs, and the startups here are not just creating future innovation, they're actually solving existential needs that people need on a daily basis. So it's very different from that regards. But the problem is education, even for the public itself, and what's the media role in understanding what is a startup, what's the risk, and that this is actually a risky business, and it's okay for these startups to fail, even if they raised $10 million, $20 million.
One can only imagine what would be said about Africa if the 16th largest bank failed.
Right, exactly. Somebody told me that I just back in Africa and failed. The MF is significantly different.
Yeah. Well, we know the power of brand when SVB has the name of Silicon Valley and the affiliation of risk now actual location of Silicon Valley. And I actually work for an American company, a global VC headquartered in Silicon Valley that is, as you mentioned, is one of the most active top 10 investors in Africa. We also have 3 location where we have hubs in Africa. So it's not like we are a VC that invests out of the US directly or out of Europe directly into Africa. We have boots on the ground. We have offices in Cairo, in Morocco, in South Africa, and we have plans to expand across sub-Saharan Africa as well. So with the investment comes other investment in human capital, in innovation, where we run accelerator programs without any equity from the founders. We work with corporates in Africa that look to attract more startups. So actually coming out of Silicon Valley, looking into the continent with boots on the ground, not just screen and like Zoom calls with founders, etc. So we are really heavily investing in the continent, not just in the startups, but in the infrastructure of the ecosystem.
We hear about Africa's latest tech unicorns, fast-growing companies valued at over $1 billion. And there's a lot of excitement for what tech innovation could do to develop the continent. But how much does tech actually contribute to African economies? Or how much could it, if given enough resources to grow? Nigeria is Africa's largest economy, and historically, oil has been the driving force. But last year, the Nigerian Bureau of Statistics noted that ICT accounted for 18% of GDP, far more than oil at 6%. Recently, the government announced a major fund for young tech entrepreneurs. African startups may have had a record-breaking year in 2022. More than 1/3 of those investments came from sources headquartered in the U.S. Only about a quarter came from Africa. For some, the lesson from SVB is that African tech funding sources need to be brought closer to home. Eric, what are you seeing as far as looking at what Nigeria is doing? How important is that initiative? And how much do you think other governments will do the same?
African governments are waking up to the reality that they need to start driving a very conscious agenda to back early stage founders and to drive capital into entrepreneurs, because entrepreneurs are the ones that will really drive economic growth. So I think that while some may be saying that they are waking up late, governments always wake up late, right? But it's better late than never. There has to be a very clear policy agenda to make that work. It cannot be just, left to its own success factors. You need to be able to have academia, churning out the requisite skill sets that are going to be matching the capital, the physical capital that's put into these companies, so that these companies can be able to grow and perform as needed. The African rising narrative is actually a tech or telecom rising narrative that has not actually been given the attention that it needs. Because look, the world is growing to a knowledge economy. The economy that are going to be predominantly competitive in the 21st century are not going to be driven by resources. They're going to be driven by exceptional technology and knowledge models. And Africa is actually leapfrog and is in the forefront of that. These companies are also solving real problems. I mean, one of our companies in Kenya, Finaccess, essentially is built a way for informal savings and lending groups to be able to use technology in the service they deliver. In Africa, informal savings and lending is huge. In Kenya alone, these circles control about $12 billion. So this is $12 billion that is outside the formal banking sector, right? So these are real economic activities that these startups are driving that will really have strong impact on these economies.
Every day in Africa, you can see the changes that are happening from the ICT sector. So why is it that Africa investors are not leaning towards investing in this sector? What happens if there's that disconnect?
Absolutely. Maybe hopefully it's going to change. What we do for early stage, especially to champion within, we try to bring them on the ground, inviting maybe the first couple of times their trips by the government or by other ecosystem catalysts or players, enablers, you name it, to bring these investors on the ground.
Why is it that the banks are not investing in tech when they see it around them every day?
So banks in Egypt, for example, prefer to become LPs and let the VCs do the actual work and the proper due diligence. And the other part is because when it comes to financing, not direct equity investing, the risk is too high. And again, they don't have the necessary tools to score the users. For them, don't have an identity. So they don't have KYC. They cannot come into the branch and make sure that this person is not lying about their identity, and thus their scoring becomes a bit more risky and lower. Not having eKYC up and running is difficult. Until we have it, banks cannot be lending to anyone. And again, having the banks look at startups that are not generating profit for loans is also something quite unheard of, even in the mature ecosystems. So having venture debt as a tool, for example, is becoming very common. VCs are now launching venture debt funds so that they can come in and close that gap. And again, you will always, most of the time in Egypt, for example, find a bank as an LP behind that VC that is providing that venture debt. And this is the smart way of connecting all stakeholders together, but let the people with experience, with expertise, do the deployment, do the due diligence, and slowly, maybe one day you will have corporate VCs part of these banks, or these banks starting to become more SVB-like and less traditional.
Sharif, when you were looking for funding for your company, what was the response from various factors, from U.S. banks, from African banks, from VCs?
On the point of traditional banks or traditional investors, our valuations don't make sense, right? Our business models don't make sense. They look at IRR, they look at profitability, they look at multipliers of revenue. That doesn't work for startups, right? That's not the best way for us to work or to fundraise. That's why also we have to go to these VCs or angel investors or more risk appetite, high risk appetite, people who are willing to go for a long-term 5-6 year, even 10-year return until you become profitable, or understand that they can exit in different rounds and make money out of it. So it's a very different dynamic than, for example, going to a bank who looks at the real estate and a certain IRR over 20 years with a certain percentage with profitability margins, royalties. It's a very different dynamic, and they don't understand that. Although we do have a bank as an investor, right? So we do have an Egyptian bank, one of the largest Egyptian banks actually, as an investor. So banks are starting to look at it and invest. Yet, as Karima mentioned, they usually just go become an LP. And that's who we go and talk to. We talk to these funds that have actually money from these investors, or from the sovereign funds, or even from certain corporate or even family offices or high net worth individuals, right? So you need to make sure that you're talking to an investor that can provide value, not just money, what that investor can bring to the table. So for example, if I'm expanding to Nigeria, then who's the best investor to support this to go to Nigeria, right? We're always complaining that there's not funds, but the reality is there are funds, and there are always VCs are deploying, even during economic crisis, even during now where people are saying it's a little bit dry. It's not. There is money on the table. We get offers. A lot of other startups are getting offers to invest. You need to kind of find the space and the type of investor that works for you, and that's looking for that type of business.
One of the things that we do is that we host an annual event on the matchmaking where we invite normally about 40 to 60 investors. We try to get as many local investors. We even do training workshops for local professionals and family offices that want to go into tech investing, and this is part of how we're helping build the local ecosystem one country at a time. So every year we go to a new country. This year is our 10th anniversary. We've catalyzed more than $50 million worth of investments at our events and at other events. So it is changing, and we're going to see more local capital coming to the table. Also, as more and more companies become successful, because at the end of the day, people want to invest for returns. So if the sector begins to make more returns, it will automatically get local capital also coming to the table.
That brings us to the end of our program. Thank you so much to my guests, Eric Osiakwan, Managing Partner at Chanzo Capital, Karima El Hakim, Country Director in Egypt for Plug and Play Tech Center, and Sharif Aziz, Co-founder at Subspace. To our viewers in Africa, America, and around the world, thank you so much for joining us. I'm Carol Pinot, host and producer of Africa USA Now. Production by Kellen Cody and Nikki Albin. Associate producers Alessandra Solase and Alicia Gupta. Editing by Batsy Freddy. Graphics by Blessing Katsidzira. Africa USA Now is presented by the World Trade Center, Washington, D.C. You can find us on YouTube and your favorite podcast apps. Be sure to follow us and leave a review. A special thanks to the Africa Investment Forum for their support. Africa's investment marketplace is championed by the African Development Bank and its partners to accelerate the closure of the continent's investment gaps. Our production partners are Africa Global Schaefer and Pixie Corner. For more information on Africa USA Now, visit us at africausanow.com. We hope you've enjoyed the program and that you'll continue to tune in as we delve further into the intersection of Africa and the United States.